So I'd like to analyze a trade that I lost on 24th February. This was something I referred to in the previous video, my first video, and here we are. Let's learn. So we're looking at the chart of BTC on 1 minute time frame. The daily chart context was trading range to bullish. So I was looking for bullish trades or in the long direction, and we had the breakout of the symmetric triangle being formed here, as you can see. And this is something I discussed in the previous video. So we are there. This is all that has happened. Okay, market went up, then it went down, took support from a couple of levels, which I've marked. I've also marked the specific candlesticks where it took support. So after it had taken two supports at the two purple arrows, I was looking at the third arrow or the third green candlestick. Let's zoom on to it. So I took the trade as soon as this candle closed. It says I took it on this next candle, but it was just after the green candle had closed. And I took the trade because it closed above its high, which is sort of a bullish sign, and it closed above the 200 EMA. The blue line is the 200 EMA, and the red line is the 20 EMA. So I thought, since we are testing the support again and I see a great bullish candlestick and the overall context is bullish on every frame, bullish to trading range. So I thought it was a great idea to take the trade, and I took the trade with stop loss one just below the low of this candle and take profit twice as high. So risk to reward ratio of 2:1. However, something really interesting happens. So we have a little bit of indecision after the green candle, a mini trading range here for the next four candles, and then a drop, then back up, and then a sudden drop again. So I'm referring to this point. This was a sudden drop. And yeah, it's hard to explain why did that drop come, because there was no specific resistance level. Yeah, so it's hard to explain why that happened, but I do understand where I could have taken a better entry or when I could have taken a better entry. One way to take a better entry was to see this candle, the next candle after the green candle, closing above its high. If this candle had closed above its high, I would have gotten more confirmation. And then there would have been a higher probability of getting a 2:1 trade. Perhaps we could have closed above this high. That would have been a possibility. So this trade failed when I took a risk to reward ratio of 2:1. However, it's interesting to note that if I had taken a risk to reward ratio of 1:1, which would have been just around this level, I would have actually secured the trade. So why did 2:1 fail, and why would have 1:1 risk to reward ratio succeeded? This comes down to the fact that, probability of going 1 unit up is relatively similar to going 1 unit down as compared to 2 units up, which is a little bit less probability because you're expecting 2 units up. So that was that. It is still unclear why there was a sudden reversal here. Perhaps we are looking at some resistance level which I don't see, but it's unclear to me. What is clear to me is that we could have taken a better entry if this candle had closed above its high. And so eventually I got a loss of 28. I can show you here, it's 25.41. But the great thing is, since I managed my stop correctly, we even went a bit more down, as you can probably see. Let me get the thing. We went down a bit more, slight retracement, then back down, and then we went up. Okay, but that was hard to predict. I mean, who would have predicted a double bottom here, since there were no concrete support levels around here? That's okay, but I'm more curious. I'm unable to figure out why did we have a sudden reversal there. It's quite interesting, quite interesting. Maybe the 20 EMA acted as resistance after the close. It just pulled the price back down. The 20 EMA could have been an actor here. I'm still trying to figure this out. If any of you know or have any ideas that could help me, do let me know. But that's my analysis for today. That's my analysis for today for this chart. I hope you guys liked it, and I'll see you in the next video.